Alright, so you want to get into stock trading, huh? Maybe you've seen people talking about big wins, or you're just curious about how the whole thing works. Either way, you're in the right place. Maybe you've heard the phrase, buy low, sell high. It's the golden rule of investing, and it sounds like a no-brainer, right? But let's be honest, if it were that easy, everyone would be rich. So what does it actually mean, especially if you're just starting out? Let's break it down in plain English, step by step, so you can actually use these ideas in real life. First up, when I talk about stocks, I mean those little pieces of ownership in companies. When you buy a stock, you're literally buying a slice of that business. You buy them, you hope they go up, you sell them, you make money. That's the dream. But remember, it's not always a straight line to success. The stock market's a roller coaster and nobody can predict the future. Prices can swing wildly in a single day and emotions can run high. So how do you know when a stock is low and worth buying? Is it just about finding the cheapest price? Not quite. Here's where charts come in handy. Charts are like a map of a stock's journey, showing you where it's been and hinting at where it might go. Imagine a graph that moves up and down. Those are the prices, right? The ups and downs tell a story about what investors think and feel. If a stock's price has dropped but the company's still solid, it might be a good time to buy. That's buying low. Sometimes a good company just hits a rough patch, and that's your opportunity. Now, you don't want to just buy anything that's cheap. Cheap doesn't always mean good value. Sometimes prices drop for a reason. Maybe the company's losing money, or there's bad news on the horizon. Maybe the company's in trouble. Or maybe there's a bigger problem in the industry or economy. This is where reading articles and doing a bit of research comes in. Don't just trust the numbers, dig a little deeper. I always check the news, analyst reports, and earnings updates before I hit that buy button. The more you know, the better your decisions. Alright, let's talk about selling high. This is where you lock in your gains and see your hard work pay off. This is the fun part, when your stock goes up and you decide it's time to cash out. But knowing when to sell can be just as tricky as knowing when to buy. Here's a tip, set a target price before you buy. Decide in advance what success looks like for you. That way you're not just guessing when to sell. You've got a plan and you're less likely to let emotions take over. Maybe you want a 10% gain. Or maybe you're aiming for a certain dollar amount. Whatever your goal, write it down. When the price hits your target, that's your cue. Don't second guess yourself. Stick to your plan. Don't let greed get in the way. A profit's a profit. It's better to take a solid win than to risk losing it all by holding out for more. Charts can help here too. Look for signs that the price is peaking or starting to turn. If you see the price shooting up and then starting to dip, it might be a sign to sell. Don't wait for the perfect top. Catch the wave before it crashes. And don't forget, no one ever went broke taking profits. Celebrate your wins, no matter how small. So to wrap it up, do your research, use charts and articles for clues, buy when prices are low but the company's got potential, and sell when you've hit your target. Stay patient, keep learning, and don't be afraid to make mistakes along the way. Keep it simple, stay curious, and remember, every pro was once a beginner. The more you practice, the better you'll get. If you found this helpful, hit that subscribe button and stick around for more beginner investing tips. There's a lot more to learn, and I'll be here to guide you every step of the way. I'll see you in the next one.